We begin with Sonali and KKR's possible bid for Walgreens Boots Alliance. The private equity firm has formally approached the drugstore chain about taking it private. This leverage buyout could be how big?
No small deal. It could be the largest in history. It could edge up to $80 billion. When you think about the premium that the sponsors would need to pay, remember it's $56 billion in market value, another almost $17 billion in debt value. That means when you break it down, it would maybe be about $20 billion in equity at the very minimum and another 50-some billion in debt.
What's the logic behind taking it private?
So you have Walgreens here. If you look at the stock price alone, that'll give you the answer. It's been falling quite a bit while the public equities markets have been rallying really for the most part. And they've been really competing with the technology industry that's been taking over this retail play. And it's hard for them to grow and invest in what they need to compete with the Amazons of the world.
How feasible is it for them to get this deal done?
Well, look, it depends on who you ask. If you ask Steve Schwartzman, the head of the largest ever private equity firm, Blackstone, he says this is not possible. But KKR's obviously made the approach here. You have Goldman Sachs, John Waldron, the president, told me just last week that he believes that there's enough capital in public markets to really make this happen. And so it's a debate for sure.
There certainly is a lot of capital, which brings me to Kelsey. This flood of money raising questions about leveraged debt of all sorts. One player recently said it had gotten grossly out of control. He was speaking about the leverage lending market. Kelsey, please explain.
Yeah, so Dan Zwirn from Arena Investors said that the leverage lending market is, as you said, grossly out of control. In particular, the middle market private debt space. And that's mainly because of private equity, he says. As purchase price multiples have just risen, so has leverage, and credit quality in turn has deteriorated.
What's the consequence of this? Does he expect a rash of defaults, or is he recommending some prescription for investors to be more prudent?
Well, in his space, he has a pretty broad mandate. So he's looking into more nichier parts of credit. We're thinking special situations, real estate. He also likes oil and gas lending where there isn't as much competition for deals. But he says recoveries may not be as bad as people fear, but it's still going to be a rough ride along the way.
All right, so grossly out of control, but not about to collapse, akin to 2008.
Exactly.
All right, which brings us to Davide, because we can see this flood of cash continuing to go into private markets. Davide, you reported that Apollo Global in particular is planning to capitalize on this. How so?
That's right. They're planning to double essentially their assets under management. That will bring them to around $600 billion over the next 5 years. That's significant because a lot of that actually comes from credit and from a privatization of credit markets that they expect will play out even more so over the coming years. One thing to remember about Apollo is that already 2/3 of their assets, so around $200 billion, is in credit. So they think they're very well positioned to take advantage of that.
And they expect their assets to double in the next 5 years to $600 billion. How has their credit arm done so far with this great privatization that we've seen?
It's done very well. Of course, they have the advantage of controlling Athene, an insurance company that provides a lot of the money to invest in credit. But they've also made sizable commitments themselves. Earlier this year, they agreed to finance a $1.8 billion loan for New Media's acquisition of Gannett. This is a deal that even a few years ago, it would have been unthinkable to be put together outside of the banking world. And now they're coming up with the check themselves.
It's just amazing that they have doubled their assets in the past 5 years to about $300 billion of assets, and now expect to double it yet again in the upcoming 5. Thank you so much, Davide, and all of our reporters.